It's Monday. I apologize for if you're like background noises and stuff. I'm sitting in my car, so I'm literally outside my house because there's a lot going on there, so I can't really, you know, record a video without having some form of interruption or something. So we are going to this is probably the first video on my channel, so I'm going to be teaching you guys how to do a top-down analysis. Okay, yeah, I'm going to be teaching you guys how to do a top-down analysis because yeah, so this is like a beginner video. Yeah, so I'm going to be teaching you guys how to do a top-down analysis on synthetics. This strategy works on every pair. It doesn't matter if it's forex, works on gold, works on anything at all. You feel me? Yeah. So let's get right into the video. Don't forget to smash the like button, subscribe, and share. Don't reach FX to the world. So let's get into it, guys. So we are going to be starting with the volatility 100. Okay. So we start by drawing the trend lines. You always start with the trend lines just to like understand the direction of the market, and I would always advise you start from the highest time frame. Okay. So on the daily the market is forming some form of a falling wedge. Okay, so this is the daily, but we can also adjust this right here just to like slim things down, but I think we're just going to leave this here. Okay, because this is the daily time frame. A lot can happen in a day, so we are expecting rejections around here. We're expecting the market to reject here or break out of this. Okay, depending on what time frame you're looking at the market from, that's like going to you know affect the perspective of how you're seeing the market. Okay, so that's why a top-down analysis is recommended. So this is what we are expecting, or anticipating rather. So we expect the market to you know break out, retest, and fly. But then let's go down to the 4 hours. Okay, let's go down to the 4 hours. We can see on the 4 hours, yeah, there's another trend inside the trend that the market seems to be respecting already. So okay, so you guys can see, yeah, on the daily is yet to do a breakout, but on the 4 hour you can say it has already done the breakout and retest, and it's just going up. That's why I would always recommend you doing a top down analysis, because you know you can't just base your analysis off of one time frame. The daily is like a whole lot, like a lot can happen in a day. So you know you don't want to just base your analysis off of that alone, as you can see. So see some form of a rising wedge. Yeah, so it had actually broken down out of this, but it was a fake out because it reversed back into the trend line and then broke to the upside, which is what a rising wedge usually do. 9 out of 10, they always break to the upside. So when you see a rising wedge, you would always be looking for you know a signal to like a buy signal. Sometimes it breaks to the downside, but then you know on the daily it didn't really break to the downside, but on the 4 hour you can see there was a break to the downside, which was a fake out and then a reversal. So you could call this a stop hand. This is like to take the early buyers stop loss, like people that oh, it's a rising wedge, I mean a falling wedge, let me take a buy. And then you take a buy around here, expecting it to go this way, you set your stop loss below the previous low or whatever, however you want to set your stop loss. And then you're expecting this. Okay, now the market actually did what you were expecting, but market manipulation is real. So the first one for your stop loss, unless you're using like a crazy stop loss, gang, like that would be crazy. Yeah, always say your stop loss below the swing low or swing high if it's a buy setup. I mean, if it's a sell setup, or swing low if it's a buy setup. But yeah, it did what you had anticipated, but it would have taken you out here before it actually bought. So another rule of thumb when it comes to trading is always wait for a break of structure, because sometimes synthetics, they're very volatile. Like actually the name is volatility 100. You feel this is a very volatile pair, and it loves to do a lot of sweeps. So you always have to be careful before you take an entry. You always wait for multiple confirmations. But along the line, I'll explain these confirmations in details for you guys, so you won't make the mistake most beginners make, and then you're like, oh my god, I'm right, but yeah, I'm not profitable. We've all been through that phase. We've all been through that phase. So yeah, let's clear up this. Let's clear up this. So yeah, so this is what we are looking at. Okay, we are looking for buy signals or a possible reversal of the trend. So yeah, if the market doesn't break out of here, we're expecting the market to sell. Okay, if it doesn't break out of here, we're expecting it to sell. But then there's no way to enter a setup unless you have like a crazy account size. And I'm literally here for like the $1 gang, people that don't really have a lot of money to fund your trading and stuff. So yeah, so we're just going to look for a couple of confluence that we'll be looking for buys if market should retrace back to here. Okay, so our first confluence will be the 4 hour order block right here. Okay, so let's mark out this 4 hour order block. So what makes a valid order block? It must break a structure. Okay, it must break a structure. So we can call this our first structure. Okay, we can call this the next structure. It broke. Okay, broke multiple structures. Actually, we could call this a structure. Yeah, we could call this a structure. So yeah, so we're expecting buys from this zone. Yeah, so your stop loss, um yeah, so your stop loss should be somewhere around um yeah, below the swing low. Yeah, that should be your stop loss. So your TP, if you're crazy, I would always advise to like take your TP at the first structure. you know you can call this the first structure. That's a 1 to 2 risk to reward, but we always aim for a 1 to 3, 1 to 5. So okay, let's say you want to ride it all the way up there, so that's a possible one to reduce the SL a bit, because your entry has to be sniper. So when you have a sniper entry, you don't really have to risk much. Like I said before, this kind of market analysis works in every pair, every setup, and it's really for like my you don't have a lot of capital to start up. I'll also be posting trades where I flip $1 to 10, 20, 30 type shit. So okay, so I'm here to like guide you guys on how to like grow your small account, especially because having a large account is easier to grow once you have the basic fundamental knowledge. I remember when you know I used to trade like a very large account, when I used to trade demo. Yeah, when I started learning how to trade, when I used to trade demo, like I used to fund, I think it used to give me like 10K to trade with, and I didn't even know shit, and I was making a lot of money. Like I think I turned about 10,000 to 200,000 in a week trading them with just having basic market fundamental ideas like the trend lines, a bullish flag. I was just trading you know trend lines, basically, bullish flags, rising wedge, falling wedge. I didn't use stop loss because the account was large. So this video here is for like the people that you don't have a lot of funding, and you're just trying to make the best of what you have. So no amount is too small. So let's say our take profit will be here. Yeah, it's first touch of the trend line. So that's a 1 to 6 risk to reward. Yeah, that's a good risk to reward, meaning if you're risking $1, you're getting 6 times your money. So $2, yeah, you do the math. So yeah, but in reality, $1 to $10 is literally 10 times. Yeah. So okay. So yeah, back to the chat, guys. So this is how we are looking at it. Okay. So let's go down to for every buy or sell the market does, there is always a reason for it. You dig? So let's see why the market bought from here. Okay. Yeah, so I'll also be teaching you guys on reversal patterns like the head and shoulder, the double top, the double bottom, and shit like that. You feel? So down to the 2 hours, nothing. So we are looking for possible short-term buys if market should retrace to retest this second trend line. So let's go down to the 1 hour. So on the 1 hour, we can see an order block. Okay. So another block is a valid order block is the last bullish or bearish candle before an aggressive move to the upside or to the downside. I'll also be teaching you guys on how to use order blocks properly, what a valid order block is, what a breaker block is, and the rest of them. Like I said, this is just the first half of the tutorial. Let me not take so much time on this. So yeah, so we are going to be looking for potential buys here. As you can see, there are a lot of fair value gaps here. Orders the market have to fill out. Yeah, so this is a fair value gap. There's a fair value gap around here. Okay, there's a fair value gap around here. I also teach you guys how to spot fair value gaps and stuff. So yeah, okay, so we are looking for buy opportunities here. So Being that this pair is very volatile, I'll recommend you set your SL below the last swing low, okay? Yeah, because sometimes it might come to sweep this swing low and buy. So you don't want to use you don't want to over leverage, and you also don't want to. That's why I always recommend to I always recommend to wait for a break of structure, okay? So these are 1 to 10 risks to reward if market should retrace back here, okay? These are 1 to 10 risks to reward market should retrace back here. But then, okay, we can see that market bought here when it came back to the zone. Now let me show you what a valid order block is. So I can already spot this. Well, let's go down to the 30 minutes so you get a clearer view of what a valid order block looks like. So we are going down to the 30 minutes. Okay, so this is why the market bought here. Okay, boom. You dig? See, like I said earlier, what makes a valid order block is a break of structure. We can call this our first structure. No. Ugh, shit. Okay, my bad, guys. Yeah. So back to the chats. That was a mistake. I always like I'm getting the hang of this, so y'all shouldn't fault me, okay? Y'all shouldn't fault me. Take that as like an ad. So yeah, Apple Store, okay? So cause knowing how I'm about to start this video all over again, I ain't even at the same shit, bro. So yeah, so another break of structure here, making it valid, and you can see between the candle, the supply order block and the next three candle, there is a fair value gap. Fair value gaps traders will enter from here. You can see. Let me mark out the fair value gap for you guys. So this is what a fair value gap looks like, okay? The let me use the dotted lines to signify the fair value gaps, okay? Yeah, so this is a valid order block. Why? It broke structure, not just one, multiple structures, and there is a fair value gap, okay? You guys can see there is a fair value gap, so there's an order that needs to be filled in the markets. When the buyers came in, they left a pending order, so the market had to retrace back to here. As you can see, the moment it got close to the fair value gap, it started to reject. There were a lot of rejections, and then it just went to the other block and boom, it went up. So this would have been a quick as usual, as always said, you set your stop loss below the last swing low or the protected high. I'll still get into details how to understand all of that. So boom, that's a quick always take TP at the next structure. So a quick 1 to 5. Yeah, that's a quick 1 to 5, guys. So I think I'm going to end the video right here. I think you guys have the idea of everything, or y'all get the idea of everything that I've been trying to say, how to trade with other blogs, how to use the trend line, the market trend, top down analysis. And there is no top down analysis without going to the 1 minute, bro. Like let me show y'all how you could have gotten into this trade from the 1 minute. Okay, so um shit, bro, this should be difficult as hell, bro. So boom, okay. So the moment the market got into the zone, okay, you wait for a break of structure and a retest, okay. So you can enter here, you can enter here, okay. You can enter after the market has broken the structure. So your entry would have been here. Your floating loss using the minimum loss size for this pair, I think, is about 0.5. If I was doing this on my phone, would have been able to calculate the floating loss, but I think your floating loss are most a couple cents, not even up to $1, because this SL should be like $1 or two. So a couple cents if you enter from here, or you could have waited, enter from the break of this structure, or you wait for the retest of this structure, which is the best entry for the smallest account size. After a break of structure, there's always a retest. You always wait for the market to come to you. You don't chase after the market. So let's say you entered around here, boom. Okay, you entered around here. You waited for the market to come to you, and you say your stop loss. You say your stop loss. So um bro, this shit be tiring, bro. Yeah, I think I'm just going to delete that one. And then you set your pardon me guys, I'm still getting the hang of this. So this is what a sniper entry looks like. I would also be teaching you guys how to get sniper entries, okay? So this is literally hands down no risks at all reward. Now this, you see why I like the 1 minute time frame, bro. The 1 minute time frame, bro, is undefeated as long as you align it down with a top down analysis, bro. Like as long as you align it with a top down analysis, bro. Okay, I thought that shit was double. Okay, so yeah, so let's draw this back. Okay, so this is literally bro, this is literally no risks at all reward, bro. This is a 1 to 25 risks to reward just off of using my strategy, bro. Like break of structure, you wait for the retest of the structure, and boom, bro, you could literally make $25 with $1 off of this strategy. Like you don't even need to risk a lot anymore, bro. This how I steady, you know this is how I flip accounts. So okay, and like I said, always take profit at the first structure. You could have cashed out at here, bro. Like you could have cashed out at here at the next major structure. That's to the 1 to 20, bro. Like, and the market still kept going, bro. You could have cashed out at here, bro. 1 to 15. You feel me? So yeah, that's how you do a top down analysis on the market, okay? That's how you do a top down analysis on the market. So I think I'm going to end the video right here and go get something to eat, because I ain't eat all day, bro. Want to start the day right for you guys. So once again, don't forget to comment, like, subscribe, you know help us get out there, bring Rich FX to the world, okay? Yeah.